Hello, everyone, and welcome to Real Estate Right Now, where we talk about real estate matters that matter to you. My name is Jay Izzo, and we are live here from Linden Craft Team Studios here in Raleigh, North Carolina, part of the Research Triangle Park. I almost forgot where we're at. We are in the Research Triangle Park. We're here. Today's show, let's talk about insurance for your home. Many of you who listen to the show, either your first-time home buyer or some of you are luxury buyers. You have luxury homes or you have new homes and they're your first home. Some of you are right in the middle. And there's a whole variety of questions of how that's different, how insurance coverage is different for your home, depending on what your home is. And people have tons and tons of questions. They always ask. And Bryce Williams with Harbor Trust Insurance, owner of Harbor Trust Insurance,
Indeed,
joins us for the third time on the show. I actually didn't remember the first time. I remembered the second time. I didn't remember the time before, but I brought him back because we just recently did a luxury show, and it started raising questions for me about how that's insured. And then I want to kind of compare that, some questions from a first-time homebuyer's perspective, that messy middle where you're at in the middle sometimes, because our average home price is around $450,000. And then you've got the luxury buyers and the ultra luxury that are over $1 million, sometimes over $3 million, as much as over $5 million. And so there's a lot of difference. So Bryce, welcome back to the show.
I appreciate it. Thank you, Jay.
So let's just dig right in for the new home buyer. Oftentimes, a lot of first-time home buyers confuse what they paid for the house with what it costs to rebuild it. Can you explain why insuring for quote-unquote market value is often a huge mistake, and how restructuring cost is actually calculated?
So insuring for the market value of a house, oftentimes for the homeowner, is going to leave them paying more money than what they should. Market value is going to include the land and the building. The insurance company is not necessarily at all concerned about the land. The land, the only concern that they have is, where does the house lie? If it's, they may have restrictions on that. But the land itself, the insurance company is under the belief that it's always going to be there. The house could burn down to the ground, land's always going to be there. So we're not concerned in including the value of the land in the amount that we're insuring the house for. We're strictly looking at what it costs to rebuild the house.